Welcome to today's Explainer. We've got a wild one for you today, unpacking a truly unprecedented moment in financial history, as presented in our source material. Picture this. It's the morning of June 12, 2026. The opening bell rings at the NASDAQ Stock Exchange in New York. SpaceX has just launched its IPO. But in the very first second of trading, something happens that has literally never happened before. Elon Musk officially becomes the world's first trillionaire. Today, we're going to use the insights from our source video to analyze exactly how this astronomical valuation was reached and what it really means for the rest of us.
Here is our roadmap for today. We'll kick things off with the anatomy of a trillionaire, move on to selling the future, break down a strategy called buy, borrow, die, take a look at the political connection, and wrap up with wealth and inequality.
All right, part one, anatomy of a trillionaire, understanding the scale.
So, we throw the word trillion around a lot in the news, right? But let's be real. The human brain just isn't wired to actually comprehend a trillion of anything. It's a number so ridiculously massive it almost loses its meaning. To put those 12 zeros into perspective, the source material points out that at a $1 trillion valuation, Elon Musk's wealth blows past the combined net worth of the founders of Google, Amazon, Oracle, and Facebook. He's richer than most countries. In fact, only 21 nations have a GDP higher than his net worth.
If we look at this through the lens of time, it gets even crazier. 1,000,000 seconds? That's about 11.5 days. 1,000,000,000 seconds is 32 years. But 1 trillion seconds? That takes you back 31,000 years. We're talking way before human civilization even existed. That is the sheer scale we're dealing with here.
But the source highlights a really huge caveat. This isn't cash just sitting in some checking account. This is what we call paper wealth. Musk himself has stated he holds only about 0.1% of this in liquid cash. The rest, it's all tied up in his 38% stake in SpaceX and his Tesla shares. The creator argues that if Musk actually tried to cash out and sell all these shares, the sudden flood hitting the market would absolutely panic investors and instantly crash the value.
Moving on to part 2, selling the future, hype versus fundamentals.
So how in the world do you reach a $1 trillion valuation, even on paper? Well, the source brings up economist Burton Malkiel's castles in the air theory. Unlike traditional valuation, looking at revenue and profit, this theory suggests a stock's price is often driven by psychology. It's about the dreams being sold to investors. The argument here is that investors aren't actually buying SpaceX's current financial health, they're buying into Musk's vision of this grand sci-fi future.
To really drive this point home, the source points out a pretty glaring contrast. In 2025, SpaceX actually recorded a massive financial loss of $5 billion. At the time, research firm Morningstar valued the company at around $780 billion. Yet, fast forward just 1 year, and the market handed SpaceX an unprecedented $2.2 trillion valuation. The assertion is that this sky-high valuation has completely detached from the actual financial fundamentals.
The creator goes on to argue that Musk keeps this financial momentum going through a long history of unfulfilled promises. The video lays out a specific timeline for us. It starts with the proposed 2013 Hyperloop concept. Then, the 2014 promise to put humans on Mars within a decade. After that, we get the 2015 claim of fully autonomous Teslas in 3 years, the struggling 2017 Vegas traffic tunnels, and finally, the 2019 promise of 1 million robotaxis hitting the streets the very next year.
To underline the widespread skepticism surrounding all this, the source brings in Steve Eisman. You might know him as the famous investor who predicted the 2008 financial crisis. Well, when speaking on the SpaceX IPO, Eisman called the valuation madness. His exact words? This is an IPO of a sci-fi story, tailor-made for a sci-fi cult.
All right, let's get into part 3, buy, borrow, die, the tax loophole.
Now you might be wondering, if all this wealth is tied up in stock, how exactly do billionaires pay for their lavish lifestyles? The source breaks down a playbook known as buy, borrow, die. It's a 3-step strategy. Step 1, you hold on to your shares because capital gains taxes only kick in when you actually sell them. Step 2, you use those unsold shares as collateral to take out massive cash loans from banks at super low interest rates. And Step 3, you just hold on to that debt until you die. When you pass the wealth down to your kids, under U.S. tax rules, they avoid inheriting that capital gains tax entirely.
The source gives us a really specific example of this strategy in action. Think back to when Musk bought Twitter in 2022. He didn't just sell off a bunch of shares and pay income tax on that cash.
Instead, he mortgaged $62.5 billion worth of his Tesla shares to secure a $12.5 billion cash loan from banks. Boom, he gets the cash he needs, all without triggering a single taxable event.
The result of this whole system is a pretty staggering disparity when it comes to tax burdens. The video points out that between 2014 and 2018, Musk's wealth shot up by $13.9 billion, but his effective tax rate was a mere 3.2%. To put that in perspective, your average working-class American is paying anywhere from 20 to 30% in income tax. Pretty wild difference, right?
That brings us to part 4, the political connection, leverage, and wealth.
Now, the explainer dives into the alleged links between corporate valuation, political lobbying, and the current administration. We're just reporting what the source lays out here. The creator points out that Musk was a major political donor in the 2024 elections, contributing $290 million to Donald Trump's campaign. The video then asserts that following this successful election bid, Musk's net worth basically exploded, multiplying 5 times over the next 2 years, jumping from $270 billion right up to his current trillion-dollar status.
The source material claims this massive wealth surge was aided by direct political favors. It lists out a series of sweeping regulatory changes that allegedly benefited Musk's empire. For instance, NASDAQ altering its rules to allow SpaceX a fast entry IPO in just 15 days. Then there's the SEC dropping a rule that required brokers to keep customer funds in safe accounts, which the video says put $70 billion of retail money at risk. It also mentions the FCC granting Starlink control over 2/3 of low Earth orbit satellites and the sudden dropping of 40 pending legal investigations against Musk.
The video actually goes as far as arguing that Musk operates sort of like a shadow president, finalizing deals during state visits. They detail a specific timeline with India to back this up. After a February 2025 meeting and an April phone call with Narendra Modi, Starlink was suddenly granted a license in June 2025. The source claims that 2 major national security conditions that had previously blocked Starlink in India were just completely bypassed.
And finally, part 5, wealth and inequality, the broader impact.
In this final section, the source pans out from the financial mechanics to offer some broader societal commentary on extreme wealth disparity. To really ground that jaw-dropping $1 trillion number we started with, the video throws out a pretty striking comparison. The UN World Food Program estimates it would cost about $40 billion a year to eliminate world hunger by 2030. When you think about it, that means roughly 1/5 of Musk's current net worth could, theoretically, solve global starvation.
The core argument the creator is making here is that taxing megawealths could have profound humanitarian impacts. They cite an Oxfam analysis suggesting that just a simple 10% tax on Musk's wealth could lift 800 million people right out of extreme poverty. The video also notes that when the UN previously laid out a $6.6 billion roadmap to save 42 million people from starvation, Musk ultimately ignored it.
Which really leaves us pondering the core message of our source material today. The creator wraps up by advising viewers to avoid getting caught up in market illusions and to instead focus on strong company fundamentals, like actual revenue and profit. But they also leave us with a really provocative question to consider. As we cross the threshold into the era of the trillionaire, how should society balance the funding of visionary, sci-fi hype with the fundamental realities of our global economy? It's definitely a massive question to chew on. Thanks so much for joining me for this explainer, and I'll see you all next time.